Hey, what's going on, guys? Welcome back to my channel. This is Blood Phantom 81. Definitely missed you guys, so it's good to be back. I didn't have a laptop for a few months, so I wasn't making my usual stock market recap or like stock deep dive videos, but those should come at a more regular interval now that I have a laptop again. So, yeah, I guess first let's catch up a little bit. So the account's currently at 457, up about 12% in the past month. I think it might get a little bit more difficult to actually get to 500K by the end of the year. And the big reason is because the market's just been running pretty hot lately. I don't know how much more it has. Like if I can make it to 500 before the next big drop, we'll see. One thing that I'm not very used to is holding on to stocks for this long because my previous trading strategy, like let's say 1 to 2 years ago, would be to always have a lot of cash available. Obviously, the downside of that is that I would usually sell way too early. Even if I was like swing trading, I would sell way too early. And so my strategy lately has been to have most of my money tied up into large cap tech. I love large cap tech. You guys know, like on all of my stock market recap videos, I always talk about the Nasdaq because the Nasdaq basically rules everything, in my opinion. And like if you just take a look at like Facebook or Google in the last like 6 months, like it'll blow your mind, and you don't realize how many people miss out on a lot of these gains, which are not even like they're no brainer gains, right? So it's just about like getting into the no brainer gains for me. Well, with that being said, I am also getting it a little bit lighter in my positions. And the great thing is that large cap tech has just been like a straight up bulldozer. It's just it's just so easy. But like I said, I don't know how much longer that's going to be running. And so I guess enough of that babbling. Let's go ahead and take a look at the overall stock market. So I guess I'll start off with the Nasdaq. So I think what tripped everybody up recently, especially as of like August 17th or August 18th, was this dip that we had here, but it ended up just being a routine retest of the 50-day moving average. And that's obviously like one of the biggest issues with a lot of bear cases is that like we always have like the 50, 100, and 200-day moving average support like right beneath us. So usually catches us before the dips get a little bit too violent. But yeah, routine retest of the 50-day moving average. Let's go ahead and zoom into a 1 hour time frame, and then basically hit its head up against this overhead resistance, something like a bull flag. And then this actually had a really good look. I was excited. I went to bed excited this night actually, and then woke up to a gap up, and then it continued to run after that gap up. And then we had a retest of this area, and then just higher highs and higher lows, just like super strong trend. And then we even had a gap up this morning, but it looks like we're closing that gap. So hopefully it can continue to act as support heading into tomorrow. But yeah, as I mentioned, I'm getting a little bit lighter here. Let's go ahead and take a look at the Nasdaq from longer term time frame. So in my last video, I actually compared this current time period to the time period that we had in 2017, where we had essentially like a bullish ascending triangle, but it was just making higher highs and higher lows. And then once we eventually did break above this, however, it was a pretty big contrast to the chop fest that we had here. We had a pretty nice run, and then someone like a retest of this area, and then we just continued to run higher, and then we took it into like another gear. And so what we see here is something pretty similar, where we had this area of consolidation, higher highs and higher lows, something of a little bit of a chop fest, although not as choppy, and then retest of this range, and then take it to another gear. And so it's as far as figuring out, when we're going to see the next 5 to 10 to 15% drop, I think it's going to be one of two scenarios. And so in my opinion, we're either going to see the next significant pullback off of a number one parabolic run like we saw here at the start of 2018, or number two, weakening market internals. And so we'll go ahead and do a little bit of a deep dive on what either of those look like. So for example, With a parabolic run up like we saw here in early 2017, this run up actually happened after a year of rally. So a year of rally and then finish off with a parabolic run up. That to me is always a sign of like, whoa, you should be a little bit more cautious here. And let me go ahead and actually throw up the indicator that I made. So after this rally, the run up launched us into what I would consider tier 2 overbought level. And so that obviously led to a drop after. And then we also had another tier 2 overbought level a couple months after that. But this one is more concerning to me, as I mentioned, because it comes after this rally. And then the other time we entered tier 2, almost tier 3 overbought level was actually here right before the March 2020 crash. And so these to me are signs that, we should get out. You might be wondering, what the heck happened here? How come we were in tier 2, tier 3 overbought level, but nothing happened? And so I actually covered this in one of my videos a few months ago, which was, we can expect that to happen after really large drops, right? This is the 2009 crash. And then, the recoveries after really large drops tend to be and can be violent, right? Like if I look at 1987, we would see the same thing. And so we have to take these overbought signals with a grain of salt, right? But as the rally starts to get a little bit older, then we have to look at these tier 2, tier 3 overbought signals a little bit differently, right? Like we have to look at this overbought signal and this overbought signal a lot differently than we do this overbought signal, right? And so here is the initial wave off of this drop, but now we have to start to take a look at these signals just a little bit differently, right? And so we're not necessarily at tier 2 yet, but I don't want to be fully long when we do, or if we do. And so, like I said, this would be my scenario number 1, is if we have a parabolic run up. I think like another few percent of this and we'd probably be there. And so, I'm just trying to, I'm just trying to be first in line in case anything does happen, and basically just reduce my margin exposure. And so I mentioned scenario number 2, and scenario number 2 would be weakening market internals. And so, no, I'm not talking about earnings or anything related to fundamental data. I'm talking about overall, how is the rest of the market strength? So let's go ahead and take a look at the advanced decline line, or we can take a look at NYSE advancing stocks. So basically the reason why I bring this up is because the drop that happened here between 2015 and 2016 was actually very significant. Let's go ahead and take a look at how large this was. So from high to low, I'm not going to consider this to be part of that, but that was about 15, 16, 17% of a drop, right? And so that is a pretty violent drop, one that it would be awesome to have cash around. But this did not conclude with the parabolic run up. This happened after we started to see weakening market internals, right? And so the advanced decline line started to make lower highs and lower lows 3 months before we actually saw a something pretty concerning, right? And so, as I mentioned, it topped here back in mid-May, right? And it wasn't until about mid-August that we actually saw a really violent drop. And so what we're starting to see here today is something not quite as extreme, but certainly we're starting to see lower highs on NYSE. And so it remains to be seen where the next high is going to finish, right? Because obviously like these two are somewhat equal highs. So I wouldn't really put too much weight into like every single individual tick. I'm just saying market internals are starting to get just a tad weak. And so I'd like to get a little bit lighter. But like I feel like everyone's been getting like let me put it this way. I feel like a lot of people have not been participating in this rally, and so hearing me say this probably gets people excited. But the thing is, like, I'm still mostly long, right? I just want at least a little bit of ammunition. When you're trading the way I do, like when you're using options to leverage, like it just makes way more sense to have cash available, right? Like if I was just buying VTI or VO, like I'm not going to be selling stocks in anticipation of like a 10 or 15% drop. Like it doesn't really make any sense. So I want to put that into perspective as well. Let's go ahead and take a look at the S&P 500. So this thing has just been on absolute tear. I can't imagine folks that are just like waiting on the sidelines, hoping for the next dip to happen. But we've just been using the 50-day moving average. It's almost as if like you're trying to play tag with someone who just uses a really big oak tree to like run circles around. Like it's just not fair, right? And so the S&P has a 50-day moving average right then and there. The same moving average that it was just hugging during the 2017 rally as well. And so, yeah, I mean, when I look at this on a short-term perspective, I can honestly see us heading a little bit higher. Let me go ahead and take a look at an hourly time frame. Like we have some support right here with this 50 period moving average on the 1 hour time frame. And so like short term can always be a little bit misleading because I can definitely see us make a higher high, but you have to put this into perspective and see like where we are relative to the drop here. And so I'll leave it at that. I won't say too much. I'm just saying getting a little bit lighter. I probably said it like 100 times this video, but yeah. Anyway, let's go ahead and start talking about crypto real quick because I feel like that's also been on my mind lately. So the 50-day the 200-day moving average is basically like the main story here, especially on Bitcoin. At various points in time, it looked like Bitcoin was getting pretty heavy to the point where it was gonna tip over a little bit. But it looks like lately, Bitcoin's been just doing one of these, right? These consolidations. The more time that we spend at the top of this range, the better. I mean, if we start to break out and make a higher high here, that would be incredible for the crypto bulls. Like if we break above like 51, like I would be super optimistic that this is it. Like we are going to go into new high territories. And so that's basically the story with crypto. And honestly, that's all I want to talk about when it comes to crypto. Last thing I'll say, let's go ahead and finish with charge point holdings. It's not necessarily about charge point that I want to talk about. It's just the fact that like, the market's going to have different strengths and weaknesses. It's going to give you different things. As of now, the market is punishing, and I mean punishing, stocks that have gone public via SPAC, right? Like you can insert charge point. Actually, just squint your eyes for a second here. I'm gonna go ahead and switch the chart to SoFi. You let me know if there's any difference. Spoiler alert, there is not. They're the same thing. You guys seen that Pam the Office meme? Same thing, same picture. Man, I'm such a memetic genius. They're basically the same picture, all right? So like there's no difference between SoFi, there's no difference between ChargePoint. I'm sure like there's others I'm forgetting right now, but like money is leaving and entering these particular holdings at the same time, even though ChargePoint and SoFi are technically in completely separate industries. They're being treated as the same class of stock, and they've been trading together. And I've been putting a little bit more money into speculative positions just because I definitely see like 2, 3, 4x potential in the next. I'm not gonna say when, but it's just like very, very small accumulation, I would say. But for the most part, I've been stacking up cash. Let's go ahead and wrap up with a portfolio update. So yeah, for the most part, I'm just stacking up cash, waiting for that next 10-15% drop, and I'll continue to take profits as the market continues to rally. And yeah, if there is like a 10% drop in the market, like I wouldn't really mind because at least then I feel safe about putting more money into the market at that point. So yeah, I guess we'll wrap it up there so the video doesn't get too long. Yeah, thanks for watching. Happy to be back, and I'll catch you guys in the next video.